Hello Kanna, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. In this video we are going to discuss about the exemption chapter. What ICAI has done is that there were various exemptions in the exemption chapter. So a few exemptions have been removed and balance exemptions have been shifted to the different chapters. They have been discussed along with the chapters itself. Hence, you will not find any separate exemption chapter in your study material. But what I have done is the earlier exemption chapter itself, whatever exemptions have been removed, that I have taken out of my material. Whatever exemptions are there alone, I have kept in the material. They are in your study material. They will be discussed in different chapters. But in my classes, I am discussing it here itself together in one place. Now exemptions. These are all the exemptions that are covered in your syllabus. Unga syllabus la these exemptions are there. So let us learn them quickly one by one. Very simple. Number 1, section 10 clause 2. For member of HUF, share income received from HUF is exempt. So HUF will pay the tax on income. This income is given to member of HUF. Hence, in the hands of members, it is exempt. No need to pay the tax once again. Okay? Did you get my point? When HUF pays the tax on income, this already taxed income, it will give to the members. When members are receiving the income, they need not pay the tax once again. It is exempt. Next, similarly, section 10 clause 2a, partner of partnership firm. Share income of partnership firm is fully exempt. So partnership firm will pay the tax on the income, and this taxed income only it will distribute to partners. So whatever income is received by partner will be totally exempt. Share income. But remuneration is taxable, interest is taxable, all those are taxable. Share income only exempt. Okay, and even if income was exempt in the hands of firm. For example, partnership firm is engaged in doing agricultural income. So section 10 clause 1, it is fully exempt. Agriculture income is fully exempt. Even still, in the hands of partner will it be exempt? Answer is yes. Still in the hands of partner the income will be exempt. Okay, because when a firm is earning an income and when the partner is getting the income from the firm, the nature of income does not change, because firm is not a body corporate. See, firm is not a separate legal entity. It is just a combination of the partners. Hence, when firm is receiving agriculture income, then in the hands of partner also it will be treated like agriculture income. But when it comes to company, it changes. Company is a body corporate. Hence, when company earns agriculture income, it is exempt in the hands of company. But same company, when it gives dividend to the shareholders, the nature will change to dividend. Hence, dividend is taxable in the hands of shareholder. Okay, so partner kaila exempt, but shareholder in the taxable when they are receiving dividend. If you understood, okay. If you didn't understand also, no problem. Not that relevant. Section 10 clause 10 BC. Individual or legal heir. In case of what? Compensation received by central government, state government, local authority on account of disaster, except loss or damage already allowed as deduction. So if there is a natural disaster, earthquake, flood, etc., in such case, if the central government, state government or local authority is giving any compensation, such compensation is fully exempt. But if such compensation, if there is any amount of deduction that has been claimed, then to the extent of that deduction, it is not exempt. Fine. Let me not take examples, not give too much time for this particular chapter. Okay, not that important. You just know that the compensation, if it is received for any disaster, then it is exempt. Then section 10 clause 11a, in the hands of individual, payment from Sukanya Samriddhi Yojana is exempt. So Sukanya Samriddhi Yojana maturity is fully exempt. Section 10 clause 16, educational scholarship. So if I am receiving educational scholarship from anyone, it is exempt in my hands. Educational scholarship is fully exempt. Next, in the hands of member of parliament and member of legislative assembly, daily allowance and constituency allowance is exempt. Daily allowance exempt, constituency allowance exempt. What about the others? It will be taxable in income from other sources. Next, section 10 clause 17a, awards that are received for literary, scientific or artwork which is approved by central government is fully exempt. For example, an actress is receiving a national award for her good acting in a movie. So that is fully exempt. Next, gallantry award recipient. Gallantry award recipient. The pension received by gallantry award recipient is fully exempt if the gallantry award recipient was in the service of central government or state government, and also he has received either Paramveer Chakra, Mahavir Chakra or Veer Chakra or any other notified award. Now there is no other notified award, there is only three: Paramveer Chakra, Mahavir Chakra, Veer Chakra. So if a person is there in the service of central government or state government and received either of the following: Paramveer Chakra, Mahavir Chakra or Veer Chakra, in such case pension is exempt. Pension is exempt. Sir, what if that person is no more? If that person is no more, then family pension received by the family members is exempt. Family pension is exempt. Family is whom? Spouse, children, parents, brother or sister if wholly dependent. Next, family pension. Family pension received by widow or children of nominated heirs of a family member of armed forces, including paramilitary forces of the Union, where the death of such member has occurred in the course of operational duty in specified circumstances, would be exempt under section 10 clause 19. So 10 clause 19, there is a person of armed forces on duty, that person died. In such case, the family pension received is fully exempt. Okay. Then section 10 clause 30, subsidy received from tea board. So if an assessee is growing or manufacturing tea in India and such assessee is getting subsidy from the tea board, then such subsidy is exempt, subject to the condition that the subsidy should be used for replantation or replacement of tea bushes, rejuvenation and consolidation of tea cultivation area. Replantation, replacement of tea bushes, rejuvenation, consolidation of tea cultivation area, and it should be certified from the tea board. Certified from the tea board. This certificate should be there with the assessee. Then this subsidy is exempt. Similarly, subsidy received from rubber, coffee, spices or any other board is also exempt, and same conditions is same as the tea bushes. Okay, as if assessee is engaged in growing or manufacturing rubber, coffee, cardamom or any other specified commodity. Next, section 10 clause 6 subsection 2. Now listen, I think all these four exemptions are for non-citizens. If I am not wrong. Okay, let us see. 10 clause 6 subsection 2. All these are related to salary. All these are related to salary. Official of an embassy, high commission, legation, commission, consulate or trade representation of a foreign state, remuneration received is exempt. For example, from Russia, one person is coming to India and working in Russian embassy, or from US, a person is coming to India and working in US embassy, then their remuneration is completely exempt. But there are some conditions. In a condition, number one, in Russia or in US, the Indian person working there, no, his salary should also be exempt. Then only we will give exempt to Russian. So Indian salary is exempt na, Russian salary also we will exempt it here. Number two, he should not be doing any other business or profession in India. Okay, if he is doing any other business or profession, then his salary is not exempt. Next, section 10 clause 6 subclause 6, foreign national employee of a foreign enterprise, remuneration received for service rendered by him during his stay in India is also exempt from tax. Condition, foreign enterprise is not engaged in business or trade, employee's stay in India does not exceed 90 days, remuneration is not liable to be deducted from employer's income. Now listen, for example, WHO is a foreign organization. It is sending its employees in India. When their employees are working in India, their salary would be exempt. In what circumstance? Number one, they should not be doing any business in India. So is WHO doing any business in India? Answer is no. Then employee stay should not exceed 90 days. Maximum the employee should stay here for how many days? 90 days only. Adukku mela stay pannakoodadhu. Number 3, WHO or whatever organization is there should not be claiming this employee's salary as a deduction in income tax. Okay, it should not be claimed as a deduction, because here if you are claiming deduction, then there we will tax your income. If you are not claiming deduction only, we will give you the exemption. Fine. So what did I tell? Foreign enterprise employee coming to India, working in India for less than 90 days. the foreign enterprise is not doing any business or profession in India and also not claiming this salary as deduction in income tax, then what will happen? Then the salary is exempt. Salary given to foreign enterprise employee is exempt. Next, non-citizen, non-resident employee on a foreign ship. Non-citizen, non-resident employee on a foreign ship. For them, the salary is completely exempt if total stay in India does not exceed 90 days. So if they are staying in India up to 90 days, their total salary is exempt. Next, employee of foreign government. So sometimes what will happen, foreign government employees will be there, they will be coming to India for doing the research so that they can have good policy decisions in their country. They will come here for research and training. In such case, remuneration received from their respective government during their stay in India is completely exempt. Okay, wow. So remuneration should be received in connection with their training or establishment in any undertaking owned by the government, company wholly owned by central government or state government or jointly by central government or one or more state government, any company which is a subsidiary of the above statutory corporation, society registered under Society Registration Act. So for all these organizations, means what? Government or government related organization, if a foreign government employee is coming to India and here he is doing the work, in such case his salary would be completely exempt. Here he is doing not the work, he is doing the training in the government organization in India. These are all for non-citizen only. Here you can write, these are below only for non-citizens. Only for non-citizens. All these exemptions are only for non-citizens. Okay. Then section 14A disallowance. I already told you Kanna, section 14A disallowance. Indirectly I told you. Section 14A tells that if you are having an income that is exempt, then loss related to that exempt income is also exempt. An expenditure also you cannot claim as deduction. Okay. So for example, here you have income from in profit and loss account from agriculture 10 lakhs, expense is equal to 5 lakhs. Is this income exempt? Answer is yes. So is this loss allowed? Answer is loss also not allowed. Sorry, expenditure also not allowed. Income is exempt, so expenditure also not allowed as deduction. Okay va? Sir, income kadiyadu. Veru expense mattunda irukku. Then is it allowed? No, because it is related to exempt income. No, it is related to exempt income, so it will not be allowed as deduction.